Bitcoin has seen a large amount of short-term volatility as a result of the CPI data. In today's video, we're going to be discussing why this monthly candle is the most significant monthly candle of 2024, what it means for the macro price action, and what you should be paying attention to. Let's go ahead and jump in. Okay, MegaWhale team, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day today. In today's video, we're going to be doing a deep dive in the macro and the short-term price action, discussing in massive detail exactly what is happening with the price action, where the price action is likely to go, and the key levels you need to be paying attention to. We'll also be doing a macro analysis based on historical price data and discussing why this particular monthly candle is of absolute significance. Before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical and the structural information, no hype, no BS, no emotion, pure raw TA. If that is the kind of content you're interested in, join us over on Telegram. It is the third link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency, with Bitcoin and the relevant economic news. If you are interested in taking your trading to the next level, join us over on VIP. We post trading setups with exact entries, exact targets, exact stop losses, trade justification, and exclusive analysis. Not only that, you'll also get access to our group chats, our general chat, our trading chart and education chat, our news, our help, our daily video, and our trade setup chat. If you're interested in getting access to all of that, contact us in the pinned comment of the free channel or click these links for more information. Let's go ahead, guys, and jump on into the video. So like we said at the start, we have a whole bunch to be talking about today, from the macro to the short term to the economic data. So we'll get stuck into it. Starting on the market data, 24-hour volume is sitting negative 1.15% at a total volume of 190 billion, so still quite high. 24-hour liquidations up 9.35% at 269 million, which is relatively high. Of course, we did see quite a surge in volatility in the last 24 hours as we had that inflation data come out, with a rapid fall off initially, followed by a break of the short-term downtrend and continuation above 70,000. We'll discuss that in more detail today. So with that short-term correction followed by the short-term rally, we saw both longs and shorts get liquidated, with 167 million in long positions liquidated and 101 million in short positions liquidated. Moving over to the broader markets, with that inflation data come out, bearish for risk assets and bullish for the dollar, we saw the DXY pump. We actually saw the DXY reclaim this uptrending support line. It remained under for about a day. Again, we did break down from an uptrending support line, and the DXY was able to break back above, reclaiming this level. We are in this upper area of resistance now, which is going to be this 104 to 105 region. We're watching closely to see how this particular daily candle reacts, whether or not we're going to sustain above this neckline of resistance or break back below. Looking at the S&P 500, we can see again not too much happening here on the weekly. The weekly candle is still very much red. This is going to be our second red weekly candle, the most consecutive red candles we have had since October 2023. Think of that, guys. We haven't had two weekly red candles in a row all the way back since October 2023 at the start. So it's been quite a rally for the S&P 500, and this rally is still, again, quite aggressive and is still in a uptrend. And it's very important to understand that these short-term corrections do not define the trend. They are just short-term. At the moment, provided we remain above the 5,000 level, we are still very, very bullish. If we do see corrections, whether it be a correction to 5,100 or even 5,000, these should be considered healthy high time frame corrections. It's only if we lose that 5,000 level do structural levels of significance on the chart actually break and we enter higher time frame corrections or downtrends. Moving over to the Dow Jones, a very similar scenario. The Dow Jones has taken a little bit more of a beating than the S&P 500, actually falling quite a significant amount from this 40,300 level down to around 38,600, breaking below the 39,000 short-term trigger. So we're very much in a short-term downtrend, looking for a move to around 38,000 next. Again, 38,000, a key level of high time frame support. We are looking for bounces from this level and macro continuations upwards. If we do lose this level, we could see an extended weekly and monthly pullback towards a retest of the prior 2021 all-time high. However, this is an unlikely scenario. Let's go ahead, guys, and jump over to Bitcoin because we have so much to be talking about today, from the macro to the short term. So we'll go ahead and jump into it. Let's go in. I wanted to briefly interrupt today's video to discuss the two exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link, and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. Okay guys, let's go ahead and jump into Bitcoin. So before we talk about Bitcoin, I want to briefly go over the recent inflation data. So as we can see, in the last 24 hours, we did see a fair bit of volatility in the broader markets as well as Bitcoin. That was a consequence of inflation data coming out relatively bearish. And it isn't ridiculously bearish data, but it isn't what we expected or what the consensus was, which was 0.3%. We actually saw 0.4%, which was equal to the prior inflation data from the prior month. If we do take a look at this graph over here, this is a graph that shows the relationship between inflation, interest rates, and interest rate trajectory. And remember, interest rate trajectory forms the basis of perceived systematic risk, and perceived systematic risk is what formulates the basis of investors' risk appetite and decisions on a macro scale, which drives assets up or drives asset prices down. So we can see at the moment, we can see interest rates are very much lagging to inflation. Again, inflation is a leading indicator for interest rates. And that is why when we see bearish inflation data, although it doesn't directly impact the perceived systematic risk in the market and thus the actual risk in the market, it does potentially influence future interest rate decisions, which can impact the interest rate trajectory, which leads to influence on perceived systematic risk in a later period. However, for that process to develop, because inflation is so leading to interest rates, we need to see many, many months of rising inflation greater than expected to see any sort of change in future interest rate expectations. So the Federal Reserve came out and did the FOMC minute meeting, and they did say they are aware of the rising inflation. However, they are still sticking to their goal of bringing inflation down and moving towards a pivot and a rate cut. So the narrative that is pushing the prices up, the narrative which is this dotted trend line, the interest rate trajectory, this is the narrative which forms the basis of perceived systematic risk, which is pushing asset prices up, is still intact, and thus the markets are still macro bullish. If this narrative shifts, then we will see shifting price action on a macro scale as the market risk climate moves towards a more risk on environment. So let's go ahead, guys, and jump over to Bitcoin. So like we said at the start of the video, the monthly candle, this monthly candle is of absolute significance. We're going to start today's video discussing the monthly, and we'll get to the short term at the end of it. So let's go ahead and take a look at the monthly charts. And there are two charts I want to show you. Chart number one over here, which is on our right side. This is going to be our weekly chart. And chart number two on our left side, which is going to be our monthly chart. Let's start by taking a look at this monthly candle. So what we can see right over here is this is essentially going to be our monthly logarithmic macro chart for Bitcoin. It shows us our 4-year cycle, but more specifically, I want you to focus on these prior highs. So our prior all-time highs. What we can notice is we have the monthly candle close above, we had the monthly candle close above, and we've already had that monthly candle close above for Bitcoin, right? We've already broken a monthly candle above the prior all-time high. That is one of the 2 validations we need for Bitcoin to transition from the bull market into the parabolic phase of the bull market. What we have seen historically is when we break above this level, we end up seeing that parabolic phase of the cryptocurrency bull market, which results in Bitcoin exploding and, most importantly, altcoin market cap and the total crypto market cap exploding as well. However, the monthly candle close above that prior all-time high is one of the 2 pieces of the puzzle. The second piece of the puzzle is going to be that with that monthly candle close above, we also see the RSI pivot over the 80 point. So let's take a look at this. If we go back to that first cycle, we can see, drawing a horizontal line, that we had the monthly candle close, okay? And with that, we had the pivot over that 80 point on the RSI, moving into the first technical 4-year cycle. Our second cycle over here, we can see we had the monthly candle close above, and on that second candle, which is the candle we are on now, we saw the pivot of the 80. Moving over to the prior cycle, which was our 2020-21 cycle, we can see we had the monthly candle close above, and on that second candle, we had the pivot on the 80. And what can we see this time? We have had the monthly candle close above, okay? And thus, if we were to follow historical patterns, this monthly candle in 20 days should be the monthly candle that results in the RSI breaking over the 80 point. And if that occurs, we have got the 2 out of 2 validations we are looking for Bitcoin to continue its leg toward the upside and go into that parabolic phase. So it is very, very significant. Now, it is important that we do see this pattern continue, as if we refer back to what strategy we were using to predict when Bitcoin was going to reach a top, it does rely on the 80 point pivot. So let's take a look at that strategy. If we take a date range trend from the point of which the 80 pivoted to the all-time high for Bitcoin, we had 9 months, okay? So from the point of which the RSI broke the 80 point, okay, pivoted above it, and we reached an all-time high, we had 9 months. We look at the second cycle. From the 80 point to the all-time high, we had a total of 7 months. And we look at the third cycle. From the 80 point to the all-time high, we had 10 months. So what we do is we take the highest 10 and we take the lowest 7, and that is going to be our take profit range. So what we look at is we look at assuming our 80 close happens this month, it is going to be 7 months going forward, which takes us to November, plus 3 months to from November, which takes us to potentially March 2025. So the take profit range is going to be between November, December to March 2025, which is between after 7 months of the 80 to 10 months. So it's an average of the highest and lowest of when the top should be in based on the RSI. So based on prior structural data, prior momentum data, if we were to close a monthly candle above 80 this month, we would expect to see a top as early as November 2024 and as late as March 2025. And the range between those 2 dates, November to March, is going to be the top range or the take profit range. So it is important that we see this historical pattern play out again, as it will make it a lot easier to use historical data to project where the price action will likely end up reversing in terms of a date range trend. So let's move over to our second chart. If we were to now say, well, what is the likelihood we're going to see that monthly candle close? Because this chart over here just tells us the impact of the monthly candle close. We're going to take a look at, what is the likelihood we see a monthly candle close out from a weekly technical perspective. So our last 3 cycles, at the point of which Bitcoin was retesting the prior all-time high, okay, retesting the prior all-time high, we saw a combination of indicators flash, which we are seeing happen exactly again the same way. So in the first cycle, what did we see? we saw as the price action retested the prior all-time high, we retested the prior cycle upper band, the white line, the high long moving average, the upper band. With that retest, again, that happened as we retested the prior all-time high, we had within that period the lower band of the pi cycle break into the green cloud of the Ichimoku cloud. That was going to be the trigger for a macro continuation upward, the combination of these two validation points. Moving to our second cycle, did we just see the same thing? We saw exactly the same thing. As we retested the prior all-time high, we also retested the pi cycle upper band. And as that was happening, just soon after, we saw the lower band break into the Ichimoku cloud from the bottom side upwards. Looking at our current cycle, we are seeing exactly the same thing, okay? As we are retesting that prior all-time high, we are also retesting the high long moving average, and as we are retesting the high long moving average, we can see the low long SMA, the lower band of the pi cycle, pushing into the Ichimoku cloud, which tells us we are seeing exactly the same environment from a technical perspective, okay, that we saw in prior cycles before we had that continuation upwards. So it is overall looking very good on a macro. Now, this doesn't mean we can't see a correction. Of course we can see a correction. Look at prior cycles, right? Look at our first cycle. Even after that point, we saw a correction, bang. We saw a correction, bang. These validations are still intact because, like I said already, no matter what happens on the price action, even if we see corrections, provided we remain above our high time frame structural levels, okay? The high time frame structural levels being 60,000. This is the key level. Provided we remain above $60,000, no matter what happens, okay? It should be considered a healthy high time frame correction. It is only if high time frame levels of support are broken, structural levels are broken, does the trend shift, okay? So it's only if 60K is broken will the trend shift and the price charts will start to look macro bearish. Anything until that point, I would still consider to be a high time frame healthy pullback within a macro uptrend. So let's go ahead now and take a look at the short-term price action and then jump back to the weekly chart. So like we've said, guys, in the last 24 hours, Bitcoin has seen a fair amount of volatility. In fact, if we look at the last month, this whole month in general, the whole month of April, it's been a relatively volatile month, right? We've seen some pretty significant chop toward the downside, starting off the month relatively red. We took a few days to climb back upwards, chopping around, reaching that same level, only to then move into another downtrend because of upcoming CPI data, and then we're broken back above that downtrend. So we've seen quite a choppy month overall. In the last 24 hours, of course, we have now broken above that short-term downtrend, so Bitcoin is now in a short-term uptrend. So let's go ahead now and remind everyone and talk about the key levels you should be paying attention to. So the key levels we are watching from a structural perspective are going to be our range highs, our range lows. So we have our 74 range high, okay? Our 60K range low, then we've got our ranges between. So we've got our 65.8, which is this level over here, and we've got our 69K level. The distance between 69K and 65.3 to 65.8 is a neutral territory. This is a neutral range. The distance from 69K to 74K is a bullish range, and the distance between 65.8 to 60K is a bearish range. So right now we are in this bullish range. If we were to see the price action correct lower, technically we would still be in an uptrend provided two levels are able to hold. Level number one, the current uptrend we have formulated, which is a combination of these higher lows developing and our lower range of the neutral range. Provided this area here, this double confluence area, is able to hold our support, we will continue in the uptrend. It doesn't matter if we come back down and retest it, that should be considered healthy. It is irrelevant. It is only if we break below this level, would we then expect a downtrend to continue and take us to retest that 60K level. So until we break this uptrend, we are in a uptrend. It's only if we break this uptrend will we then enter a downtrend where we'll be expecting a correction to 60,000. Until then, any short-term volatility, short-term chop, It has to be known that short-term fluctuations in price action, provided no key high time frame structural levels are broken, are just normal movements of the market. The market is never going to go just up, it is never going to go just down, it is going to zigzag up and down like a little staircase to the direction of which it's moving. Provided the movements do not actually invalidate key levels of structural support, there is no significant impact the movements have had on the price action, and thus the trend remains intact. In this instance, you can see we retested a 69k level, we did not close below it, so regardless of this entire move, it is chop. It is irrelevant. It means absolutely nothing. The key thing is that we are still sitting in that bullish zone, and we are still expecting that continuation upwards, provided we remain in that bullish zone. So let's now go ahead and talk about the higher time frame. Again, if we do lose that 60k region, like we said, we'll be entering a high time frame downtrend to 52 to 58k. So 58 to 52k is going to be our target if we break 60. And again, if we break above 74, well, that is going to be incredibly good, because if we break above 74, the probabilities of a monthly candle close above the 80 point on the RSI significantly increase. And if we get the monthly candle close of the 80, we get that double confirmation that we are entering the parabolic phase, and we'd expect a macro continuation upwards. So I've said it already, this range is a range of absolute importance, and it is in fact the last level of resistance before Bitcoin officially enters the parabolic phase of the bull run. That is it, the last level of resistance before we enter the parabolic phase. So do not get shaken out just before it. Make sure to be aware that while we're on an uptrend, price fluctuations are normal, provided the key structure of the trend remains intact. It is only when the structure of the trend breaks and becomes invalidated does the trend change direction, and should your positioning change as a consequence. So I'm going to leave it there, guys. Thank you for watching. Hope you have a fantastic day, and we'll catch you in the next video tomorrow. Cheers.